All right, folks, let's officially get started. Again, welcome everybody to today's webinar. What I'd like you to do for me first, we call them the three gets. The first get is get the tools you need to get the most out of this today. Pen and paper, something to drink. You'll definitely want something to write on and write with for sure. I'm gonna ask for your participation a little later, and you may want to take some notes along the way. Second get rid of anything that might distract you. What I like to do is take my cell phone, put it on the other side of my office. I turn my ringer off. I close the door. I don't like to multitask. Hopefully you don't either when listening to a webinar. I know it's hard in today's day and age to do, but do everything you can to get the most out of this and pay full attention. That way you're able to get or do the third get. Let's get ready to learn. And I know that's why you're all here today. All right, I'm excited you're here. I'm really excited to be here today. Again, my name is Jerry D'Ambrosio. I'm a senior instructor here at VectorVest, and for the last 9 years, going on 10 years, wow, I've been fortunate enough to help people improve their investing results. And I'm really excited about today's webinar. I love this topic. I think it's so relevant, especially in the market that we're in now. It's really important to be able to identify the different phases of the market. So let me tell you about the journey that we're going to take here today. By the end of today's webinar, you're going to learn the 4 types of market stages, how to profit during each stage, and then third, how to develop a winning trading plan. Okay? And my promise to you is if you follow along with what we discussed today, you'll have a systematic written trading plan detailing what to do for each market phase. Now, just so you know a little bit about me, I'm not going to bore you with too much background. Many years ago, going on, 15, 16 years now, I was a high school English teacher. So I've been told some of that flows through in my teaching style. I never thought, looking back 15, 16 years ago, I never thought I would be able to transfer that skill from that field, teaching high school kids, to this one. I've had a ball here. I really enjoy this stuff, so I hope that comes across here today. I can also promise you that I'm going to give you everything I can over the next hour, and at the end, I'll show you where you can get more help so you can get results faster. And all I ask is that for the next hour, just pay full attention, follow along, be engaged. If I ask a question, I will ask for your thoughts, and I'm going to throw up a few polls from time to time. Shoot your answer in the chat box. Let's make this more of a conversation than a lecture. I was never the lecturer. I really like to get you guys engaged and involved here. So if that sounds good, type a big yes in the chat box. Let me know. Let me know you can hear me. Yes, Donald says yes. Michael says yes. Everybody's ready to go. Good. Okay. Excellent. All right. Well, since the beginning of 2015, we've been working with clients who are participating in our Successful Investing Quick Start series. And in that series, we focus on buying great stocks, going up in price as the market is rising. And we've heard a lot of success stories about how people have turned their portfolios around and are now so much more confident in their investing. And several are ready now to take their investing to the next level. Now, some, though, are still struggling with managing their portfolio. They've become really good stock pickers, but still can't figure out how to set the right stop loss or how to protect profits once market conditions change. We were just in Tampa last week, and I spoke to a really lovely woman. She said she had a great year in 2015, made 15% in 2015, but has given it all back in the last couple of weeks because she didn't set stops. She didn't have the right stop losses set. So everything she made in a very difficult year of 2015, she's given it all back, which is so unfortunate. But at that seminar, we showed her ways to minimize risk, cut losses early. So it's what you do after the trade is placed. That's what most people are struggling with. They struggle with what to do when the market is moving sideways, okay? Or they don't know how to grow their portfolio when the market starts to go down. If the beginning of this year is any indication of how this year, the rest of this year is going to go, we need to adapt and learn how to make money when the market's falling, or we're just going to get left behind. All right, there are ways to do that, and we're going to show you how to do that here today. Well, I'm really excited you're here today because, as you're well aware, the market can go up, it can go down, and it can move sideways. But you're going to learn how to profit no matter what the market does. That's why you need to have a written plan on what to do during each market phase. Okay? And at the end of this webinar today, I'm going to give you a copy of the PowerPoint presentations just for showing up. Just for coming to today's webcast, you're going to get a copy of what we go through here today. Again, I want to hear some of your thoughts. So, what's been the biggest or the most difficult part of investing for you over the years? Okay, I'm going to give you a few minutes here to type in your answers. What's been the most difficult part for you over the years? Brian says protecting profits. Let's see, selling. Gunter says selling, just that, giving back the gains, Brett says. Dan says identifying market phases, disciplined, when to sell, consistency. Bill says risk management. Emmanuel says selling stuff I hold dear. Yeah, let's try to eliminate that from our trading in 2016. We should never hold anything dear to our hearts. It's a stock. It's not a spouse. So, we don't want to get emotionally attached. That's kind of the point I wanted to make there. We don't want to get emotionally attached to stocks. They're there to make us money. If they're not, then it's time to cut them loose. But a lot of the same responses here. Hussein says divorcing a stock. Yeah, not selling. Just selling. So getting out of positions, risk management seems to be the common theme here. And that's across the board, folks. We ask everybody that attends this seminar, anybody that we speak to, we want to know what's the toughest part, and the overwhelming response is always knowing when to sell. Okay, and that's the most difficult. But you're in the right place. I'm going to show you how you can fix some of these things. And VectorVest allows us to identify when things are starting to make a turn for the worst. Okay, and we'll show you that here. The first thing you need to know is the different phases of the market. Not all markets are the same. Not all trends are the same. There's a big problem out there, though. Okay? One of the problems is that you feel like you missed out. The market explodes right off of a bottom. You feel like you missed the boat. Everybody else is making money and participating, but you're not. So what happens? What happens when you see the market explode off of a bottom and you don't get in at the right time? You wind up chasing the market because you feel like you've left so much money on the table. You buy stocks too late, only to watch them go down right away. We've all been there. We've gotten in too late because we wanted to wait a little bit to see a more sustainable trend. The next thing you know, the market turns the corner. Another problem is it's hard to understand or identify the difference between a pullback, a natural pullback, and a major reversal. Well, the fix for all this is you need to know when the market is poised for a rally, okay, and also how to profit when the market starts to go down. So let's do it. Let me show you. Let me go into VectorVest and talk about the different market phases. I'm going to open up VectorVest. And here we're looking at a market timing graph. Okay, the most important graph in all of your platforms is a market timing graph. At the top is the price of the VectorVest composite. Think of it as the overall market index. We track almost 8,000 stocks, and we feel that the VectorVest composite gives us a much better representation of the overall market than just 30 stocks in the Dow or 500 in the S&P. Great indices, but we kind of wrap all of the major indices up, and we use the VVC as our broad market index. The bottom indicator is the MTI, the market timing indicator. What it does is it identifies the underlying trend of the market, the longer term trend, and it unifies the trends of all of our other market timing indicators into one comprehensive indicator. Okay, so end of September of 2014, beginning of October of 2014, we could see that the market was steadily falling here. Okay, the MTI reached a level below 0.60. This dotted red line at the bottom is 0.60. Okay, the market is extremely oversold at that point. You know, historically, and the reason why we've pointed out or identified 0.60, because historically, when the MTI gets to that 0.60 level, the market is extremely oversold, and we start to search for a bottom. Okay. After the market enters into that very oversold situation and is poised for a rally, we generally get these really sharp up days, and we're thinking, you know, this could be potentially be the start of a rally. So what's happening really? What's happening? Well, the bears are getting nervous, and they start to cover their short positions. Even though this candle is red here, the open of the close of the day was higher than the open of the day. So you're starting to see right here 3 days in a row where the bulls are closing the market higher than the open. That's why these candles are unfilled. So when the bears start to see that, they get nervous. They start to cover their short positions, and the bulls, quite frankly, they're just they're tired of sitting on the sidelines. They see an opportunity because the market is extremely oversold, and they jump in. Okay, we wait for a signal though before we enter into the market after this situation. Okay, we don't act on just a few up days. The primary wave first turned up on October 20th. After the MTI got to that 0.6 level, market pivoted. Okay, we had a little swing, a little reversal here, and we got our first indication of an uptrend on October 20th when the primary wave first turned up. We also received a green light in the price column of the color guard the following day. Okay, that's telling us the green light means, let me back up. The primary wave means that the market itself, the VectorVest composite, is now higher on a week over week basis. It's higher than it was 5 trading days ago. The green light means that the market is not only up on a week over week basis, but it's up on a day over day basis as well. This, folks, is what we call the blast off phase. This is the blast off phase, or phase 1. Okay. During phase 1, during the blast off phase, you want to favor stocks that have favorable upside price potential, but have been beaten down in price. Now, the more beaten down the stock's price, the stronger and sharper the reversal, and that goes the same for the market and for individual stocks. Okay, so that's the blast off phase. The blast off phase is when the MTI gets to right around 0.60, falls below 0.60, and you get this sharp reversal. Primary wave turns up, and then the green light appears in the price column of the color guard. That's the beginning of phase 1. Okay, and again, the types of stocks you want to favor are the fundamentally sound companies, the good stocks out there. Just because the market corrects doesn't mean that fundamentals are damaged, so to speak. Sometimes that is the case, but there are some fundamentally sound companies that are really poised for a rally, and they tend to explode up in price the fastest during that blast off phase. Okay, phase 2 now is the uptrending phase. Okay, I'm going to move my date line here. Right when the MTI crosses above 1. So we see the MTI is climbing. It's climbing up from the basement and crosses above 1. This tells us now that the uptrend, the underlying trend, is now up. The confirmed market call generally follows a few days or so after the MTI crosses above 1. They very well may occur at the same time. Okay, but with the MTI crossing above 1, that's the beginning of phase 2. That's called, again, the uptrending phase. This is where you want to transition from those aggressive bottom fishing stocks, right, that you made a really nice gain on in a very short period of time. You want to now transition out of those as you get stopped out to higher momentum type stocks like top VST stocks or For example, when a stock's RT crosses above 1, or their recommendation changes or transitions from a sell to a hold to a buy, those stocks are now starting to exhibit some pretty strong momentum. Maybe if their MACD, if you like technical analysis, maybe if their MACD crosses bullish. Those are the types of stocks you want to transition into once we enter into phase 2. Okay? Phase number 3 is called the toppy phase. Now I'm just going to pull this back a little bit because I wanted to show you here. Again, this is the uptrending phase back here. This was May of 2014. Don't worry necessarily about the time that I'm using or the going back here. I want to point out the behavior of the MTI. MTI crossed above 1 back here at the end of May. Uptrending phase was in full force, right? Markets hitting higher highs, higher lows. Things are great. Then the MTI gets to right around 0.5, 0.6. Okay, think of it more as of a resistance zone as opposed to an actual number, as an actual level. But the MTI is climbing to a very high level, anywhere again between 1.4 and 1.6. It's been a nice run up to this point, right? It seems though now that downside risk outweighs upside potential. The market usually takes a breather, usually stalls out a little bit, or begins to correct. And we've seen that, a few times. We saw that here. Let me just pull this back a little bit more. We saw that back here in March of 2014 when the MTI crossed above 1.5. Look at what the market did. It stalled out a little bit. It started to correct. And then we began to enter into phase 4. Now, this is the downtrending phase. Okay. When the MTI crosses above 1.5 and then starts to correct, we begin to enter into the downtrending phase. That's phase 4. So let me talk about what you want to do in phase 3. I'm sorry, I'm getting a little bit ahead of myself here. What do you do during phase 3? Think about it. If you participated in the blast-off phase, okay, you then transitioned from out of those bottom fishing stocks to higher momentum type stocks and had a great run, made some really nice gains here during this stretch, okay? Now the MTI gets to right about 1.5. What's going through your head? Well, you're thinking, well, I know what Jerry told me and I know what VectorVest is telling me. They tell me that when the MTI gets to 1.5, downside risk outweighs upside potential. So you begin to get defensive. What do? You tighten up your stops, okay? You stop replacing stocks that you get sold out that meet your stop criteria, okay? Maybe you start to sell covered calls or trade some neutral options to defensive options to help offset any cost on the underlying positions, okay? There are choices. You have a ton of choices when the MTI gets to that level. The point I'm trying to make is you have to do something. Look historically. We can look over the last 10 years and you could see every time that the MTI gets to that 1.5 level, what does the market do? Ask yourself that question. What does the market do every time that the MTI gets to that 1.5 level? So why treat your portfolio the same at that point in time? You got your loose stops. The market is trending up. Things are great, but it's time to get defensive when the MTI gets to that 1.5, 1.6 level. Okay, and that can lead to phase 4, which is the downtrending phase. Now, the downtrending phase starts with either the confirmed down signal or the MTI falling below 1. Okay, you have some choices here as well. You can go to cash, liquidate your holdings, sit on the sidelines, okay? Now, if you didn't stop replacing closed positions when the MTI got to 1.5-ish, you'd want to start doing that now for sure, okay? When we get a confirmed down, we can see here, what did that confirmed down lead to? It led to lower prices, and that was a really good opportunity to either stay on the sidelines, play the market to the downside, buying contra ETF, buying puts, things like that. Any type of bearish financial instrument that you feel comfortable with, that would be the time to do that. Confirm down, MTI crosses below 1. All right, and that's phase 4. Phase 4 is the downtrending phase. Now let's take a look at right now. The market has been getting killed lately. There's no question about it. Okay. The MTI is currently below zero point 0.6. Let's take a look at the other two times over the last 6 months that the MTI went below zero point 0.6. What happened to the market shortly after? We started to get a rally. We started to rally a little bit. All right. This wasn't a very strong one, but you know what? This one in October was. There was some really nice opportunities for some gains here after the market entered into that oversold level. Look at where we are now. Okay. Going forward, what are we waiting for? Primary wave is what right now? Primary wave is down. It's been down for a few weeks. We wait for the primary wave to turn up. We wait for the first green light in the price column of the color guard. Then we start going bottom fishing. So I said earlier that this particular webinar is very pertinent to the current market conditions because we are, we're not in phase. We're not in the downtrending phase anymore. We are, but we're starting to enter into hopefully phase one soon, where we get that blast off that we've been hoping for. Again, but we wait for the signal. We wait for the primary wave to turn up first. Clearly, it's been down now for the last couple of weeks. All right, let me go back into the PowerPoint. And just to show you here, this was the same October time frame that we were looking at. And the primary wave turned up again on October 20th. And the confirm call turned up, I believe, on November 12th. One of our best bottom fishing searches, S&P 500 Stop Ascending, went up 11.5% during that 3-week time period, while the S&P only went up 7%. So we outperformed the market during the blast-off phase. That's our goal. We always want to outperform the market. We did so during that time. Again, what do we want to do when we enter into the confirmed up situation? We want to transition out of those bottom fishing type stocks and into higher momentum type stocks. So the confirmed down signal came, I believe, on December 9th. Our top VST stocks, which are, folks, high momentum type stocks. If you look at the RT rankings or the RT values, they're well above 1, and these stocks are in really nice uptrends. The S&P went down 1% from the confirmed up to the confirmed down, and our top stocks, our top high momentum stocks, went up 2% during that time period. All right, here's that same confirmed down situation. After that market downturn, this was the confirmed down before that. I'm sorry. After that market downturn, we had a green light in the price column of the color guard. During that down situation, index contra ETFs went up 3%, while the S&P fell 2%. So we have to start to identify these market phases because we can benefit, we can profit from each phase. Your biggest gains are going to be during the blast off phase. You're going to see some moderate, steady gains during the uptrending phase. Okay, it's time to protect profits once you enter into phase 3, and then the downtrending phase is where you could start playing the market to the downside. All right, so let me move on. What sort of impact could this have for you now? Maybe you weren't aware of any of this. Maybe you didn't know the different market phases. Okay, what sort of impact could this have on your trading going forward? Let's see. Sivaram says, Billy Joy says major. Bruce says positive. Emmanuel says better sleep. WB says huge. Michael says cut losses. Yeah, you always want to be able to manage risk and cut losses. Dave says caution. Recover some losses. Mark says, William says better planning. Let's see. Somebody just says, Raymond said this could change my game. He said that's awesome. Marla says more profits. Jean-Charles says positive when correctly identified. Herb says will help tremendously to work the phases. Yeah, you need to understand this stuff, folks. You need to understand these different phases because, they're not all the same. Not all markets are the same, okay? There's stronger uptrends than others. There's stronger downtrends than others. But generally, those trends begin with extreme levels, extreme situations. Think of it like stochastics. I don't know if any of you guys like any technical analysis indicator, but it's like a rubber band almost. Stretch a rubber band, pull it. The more you pull it, the sharper that retraction is going to be when you let it go. And that's kind of how the market is. The stronger the pullback, the sharper the reversal. Okay. All right. So you've come to a fork in the road. Kind of a rhetorical question, but would you rather just focus on phase one or do what the pros do? You know, they pay attention to all four phases and they profit no matter what the market does. What separates, I really believe that what separates pros from kind of the amateurs or more the more novice traders is they adapt to changing market environments. And if if you haven't realized that the market is changing before our eyes as we speak, you have to start believing that because the environment is changing. And what they do is they adjust accordingly. You know, so we're going to need a written trading plan for each of those phases. And what I just showed you, knowing all four phases, is key to developing that trading plan. All right. So we now have a better understanding, I hope, that not all markets are the same. There are different phases and behaviors of the market, and we have to be prepared no matter what the market throws at us. And let's see how we put all this together in a trading plan. Okay. We've polled thousands of our clients, and 80% of them said that they didn't have a trading plan. They didn't have a roadmap of any kind that laid out when and why they were going to trade. So what happens when you don't have a trading plan? You trade emotionally. Okay, you start making bad decisions. You get attached to stocks. Okay, because you don't have any, written rules that tell you when to get out. You don't stick to anything. The second things start to turn against you. You panic and scuttle the ship. You don't have hard and fast rules laid out that let you know when to get out. You're trying to do so many different things that you don't stick to just one thing because you just have too many choices. Okay. You don't know where things went wrong. When you don't have a plan, it's like driving somewhere and not knowing how to get there. Thank God for GPS nowadays because I really wouldn't know, how to get from one place to another. But there's my roadmap. That's how I know how to get from one place to another is because there's a plan there. Okay, you end up lost a lot of times and really confused if you don't have that plan. All right, I'd like to take a quick poll. Now I'm going to do this via GoToMeeting. Okay, I'm going to launch the poll, and what we're asking is, do you have a trading plan? Okay, the choices are yes, but I don't always follow it. No, yes, and I do follow it. So I'll give you a few minutes here to answer. Tom says you are describing me, Jerry. Yeah, I mean that's a lot of us. We have to learn to get out of that. We have to learn to fix that. 55% so far says yes, but I don't always follow it. 37% says no. Wow, that's a high percentage. No, I don't have a plan. 8% says yes, and I do follow it. Okay. 60% of you voted. I'm going to wait till about 70% of you voted, so I can share the results. I want to share the poll with everybody. 55% says yes, I don't always follow it. Looking at about 36%. So let me close the poll now, and let me share it with all of you. Here's the results there of the poll. So what are we looking at? We're looking at about 55% of you, more than half, say that you do have a plan, but I don't always follow it for whatever reason. Okay, emotions, plural, is maybe what veers you away from following the plan that you have in place. 37% says no, I don't have a plan. Okay, and 8% says yes, and I do follow it. Tom says, wow, I'm not alone. And Steve says, plan not good enough. Okay, so maybe it's broken and you don't know how to fix it. Okay, so let me close that poll. Let me hide it now. All right. Okay, we believe that there are three key principles that you need to understand first before you even begin to create a trading plan. Okay, you need to know these three key principles. This I love this slide. First, the slide here says take a selfie. What we mean by that, we don't mean take a picture of yourself. We mean take a good look at yourself as an investor and come up with a profile, okay, of yourself. Ask questions like, how much time do I have to invest? How much risk am I willing to take? And at the end of the day, how much money do I want to make? Okay. So let me draw. Give me 1 second here. I'm going to draw on this slide here. So, for example, for time, are you an end of day trader? Okay, only look at your portfolio at the end of each day. Or are you an intraday trader? You look at real-time data during the day. You have time during the day um, to look at the market. How frequently are you trading? That goes into the time category. Okay. Risk. How much risk are you willing to take? Do you follow the 1% rule? Okay. Never risk more than 1% of your overall portfolio value on any one position. What's the maximum drawdown that you're willing to accept? This is really, if you look at your equity curve, your portfolio equity curve, look at it as the highest peak to the lowest trough. How much money are you giving back at one time during a campaign? So what is a reasonable maximum drawdown that you can live through? Okay. What market timing system should you be using based on your risk tolerance? If you're not willing to take on a lot of risk, maybe you'd use a slower market timing system. If you're like me, a little bit more aggressive, willing to take a little bit more risk, and again, you have to answer this for yourself. You may use the primary wave or a green light buyer as your market timing system. Create a profile for yourself. And then finally, how much money are you looking to make here? Maybe on individual stocks, do you have a profit target in mind? If you make 10%, 20%, you look to take the position off the table. Maybe you shoot for an annual rate of return. Once you hit 20%, you're very satisfied with that. So answer all these questions. Kind of create this profile for yourself because it's going to help in your trading plan development. All right. Just erase this for a second. Excuse me 1 sec, folks, while I get there we go, the mouse. It's not, there we go. My mouse is, I'm going to keep the laser pointer. I just can't seem to get my mouse back. My pointer options, arrow options, visible. There we go. Wonderful. Okay. So you want to create a profile for yourself. Now, do you have the right components? Do you have all of the right components? And we feel that every successful trading plan should consist of three main components. You might think it requires more than this, but it doesn't. You need to know when you're going to be buying stocks. You need to know what stocks you're going to buy. And the third and most important one, right, is when to sell. So let's dive a little deeper into each. Okay, when to buy. The first thing you have in your plan is what will trigger me to enter the market. For example, maybe a green light in the VVC price column of the color guard. If you don't want to take a lot of risk, maybe you use the confirm calls. Okay, but this is part of your trading plan. What's going to trigger me to enter into the market? And that's going to be the market timing system that you feel most comfortable with. Number two, the next component is what to buy. What does your stock selection process look like? What criteria will I use to enter a trade? Okay, for example, maybe EPS rising. You look at a 1-year chart and the earnings per share is going from bottom left to upper right. Maybe you only buy undervalued stocks whose price is less than their value. Maybe part of that trading plan is I'm not going to buy a stock unless it's moving higher after 10 a.m. I mean, the 10 a.m. rule, folks, is so important. And it's been so important this week, especially because we've got a lot of early reversals. You know, things looked pretty favorable this week early on, but it really took a turn for the worst pretty much all week. So maybe this is part of your trading plan. You know, if the stock is going higher after 10 o'clock. Another example is maybe just top VST stocks from the stock viewer. You like that pond. You know, you feel comfortable fishing in those waters, so you like top VST stocks. You like technical analysis maybe. Maybe if a MACD crossover occurs and it does so on higher than average volume, that may trigger you to enter the trade. Another one, how many stocks will I buy at once? Okay, are you going to buy all 10 at once or all 5 at once, or maybe you buy 2 stocks per day until you finally reach a 10 position portfolio. Okay, spread your risk over time as opposed to all at once. You know, another one, how much will I invest in each stock? Okay, I'm going to invest 1/10 of my total capital into each positions. I want to hold 10 positions. I'm going to put 1/10 of my total capital into each position, so I'm not overly weighted in one position. Again, spreading out your risk. Number 3, the third part of your trading plan is knowing when to sell. You're going to ask, what will trigger me to exit the market? Maybe a confirmed down signal, okay, if that's the timing system that you're using. What will be my stop criteria? Another example is a 10% trailing stop. What is my profit target? And I love this question. What will I do if my profit target is hit? So, for example, if your profit target is 30% gain, maybe in your trading plan you say, if I hit that gain, I will sell half my position and then tighten the stop to 10% below the current price. Okay, so you're financing the rest of the position by taking half of it off the table. So these are just a few examples, folks, of what a trading plan looks like, and all of these questions should be answered in that plan. Okay? So now that the wheels are starting to turn here and you're thinking about what your trading plan looks like, let's write it down. Okay? You should always put your plan to paper, and it doesn't have to be more than one side of a piece of paper. You don't have to get a composition notebook and fill it up with rules, different rules for all different situations. It shouldn't take up more than one page. Okay? A Chinese proverb says, the faintest ink is better than the best memory. Never rely solely on your memory. I remember when I was in college, I was fortunate enough to play basketball in college, and we were given a playbook. And I used to copy the playbook, write it down over and each play. I used to write it down over and over and over again instead of just reading it and trying to, put it to memory. I would always write it down. I'd always create copies of it. I learned better that way. And each of you is different, but write it down. You always want to write it down. So keep it by your desk. You can always refer back to it when you need a little refresher or you need a reminder of what to do. All right, so let's do it. Let's create a trading plan together. This is where I want you to kind of get involved here, and draw this little grid here. Okay, 3 rows across the top, 3 rows and 3 columns. All right, and I'm going to attempt to use my pen here again. Okay, and the first row is the first part of our trading plan. When to buy. Okay? This is where your market timing signal, this is the market timing signal that you're going to choose. Same questions that you want to ask yourself. How much time do I have? How many stocks per day do I want to buy? And also, am I an end of day or an intraday trader? How often am I able to watch the market throughout the day? Am I okay with placing a few trades a week? Or maybe you just look at things on Friday at the end of every week and decide how you want to, rebalance your portfolio that way. The second one is what to buy. Forgive my handwriting here. It's very difficult to write with a mouse. What to buy. Okay, so here's your stock selection criteria. How many stocks am I going to hold? Number one, okay? And the criteria for those selections, again, may be price less than their value. I'm only going to buy stocks that are undervalued. I like technical analysis, so I might use a bullish MACD crossover in my stock selection process. And number three is when to sell, the most important part. This is where the money is made, folks. It's easy to buy stocks. You know, we've all had really nice unrealized gains at one point or another, but a lot of times what do we tend to do? We tend to give them back because we don't, we're not grasping this core part of that trading plan. So this is where your exit criteria comes into play. What will be my stop loss? Okay. And what will be my profit target? You set a floor and you also set a ceiling. If a stock goes up 15, 20%, I'm getting out. I'm happy with that. Or again, what are you going to do when that profit target is hit? Maybe you take half the money off the table and you tighten up the stops on the rest. The stop loss, folks, is very important. This is going to allow you to always trade another day. You know, if you just accrue big losses after big losses after big losses, you know, you're wiping out your account before you know it, and you just won't have enough money to trade again. You really start to see your portfolio unravel very quickly if you keep getting big loss after big loss. So you have to cut your losses at some point. You're going to decide that based on a lot of risk, a few different risk management rules that we have in place. Okay. All right. Give me 1 second here. All right. Much easier that time. Okay. So always test it. Number three here. Always test it before you put your hard-earned money to it. Okay. So I'm going to go back into VectorVest. All right, and I'm looking at our back tester tool here, and here's a back test of basically all of 2015. And give me 1 second here. I make just a few changes. Okay. So here are just 3 tests, folks. You know, the trading plan development, it takes hours. It does take some work on your part in order to finally come up with a trading plan. So, for example, this is 2015. The market timing system that I used here, let's just say this is my trading plan. The market timing system that I use is the DEW market timing system. A little bit of a middle of the road timing system, faster than the confirmed calls, but a little slower than the green lights, kind of that middle of the road timing system. My stock selection search that I use is Star Search, okay? And the money management criteria that I set here was a 20% gain and a 10% loss. On paper, you may say, this fits me. This is what I want to try to accomplish here, and these are the rules that I want to have set. Well, unfortunately, it didn't work out all that well. You know, and this is, again, just 2015. 43% winning trades. Okay, so with the DEW timing system, the Star Search stock selection method, and the 20% gain, 10% loss, again, that's the third part of that plan, right? When to sell. 11.5% gain, only 43% winners. Not a bad drawdown. Here's that max drawdown I was talking about, 9% drawdown. All right, you may look at this and say, yeah, I'm not reaching my goals with this. You try a different stop. Maybe you like the stock selection, okay, and you like the timing system, but you wanted to change up the stop. For example, here I used a 3 ATR, average true range. It did better. 53% winners, okay. Now I have more winning trades than losing trades. My percentage gain is up to 27%. Max drawdown increased, though, to about 13%. Not bad, but here's where that max drawdown was, folks. So if you're looking at your equity curve, here's where you gave back the most money, right during this time. You say, okay, let me keep at this. Okay, now the top one here, Star Search for 2015. I'm going to click on Edit. I used a 10% trailing stop. I said, okay, let me try a 10. The average true range didn't work very well. Let me try a 10% trail and see if it works well with this stock selection method. And look at this. You had 58% winning trades, a 57% gain last year. Think about that for a second. 57% last year in 2015. Look at where the end date is. It's the last trading day of the year. And only an 8% drawdown. So these are the types of these are the types of things that you look at in your trading plan. How many winners do I have? What my gain is? What my max drawdown is? Commissions are all baked into the gain. And look at that average annualized rate of return, 58%. Okay, so this process, you're familiar with our Surefire Success trading systems. This is the process that we go through to create those systems, to create a really effective and successful trading plan. Now, what you would do is you would move forward with this. You like the historical performance. You would move forward with it, okay? And you start to either paper trade it or trade it in the real market, okay? Very important that you do that because it's going to give you confidence. This is going to give you confidence in moving forward with a trading plan, okay? Let me move back. So very important. You have to test it before you put your hard-earned money into it. Okay. All right. So you showed up today. I'm not exactly sure why you showed up today, but let me make some educated guesses. I hope you saw that you have to be able to react to different market phases. You showed up today. You saw the title of the webinar, how to profit from different market phases. You want to learn how to react to those different phases. Up situations, down situations, sideways situations. Susan says she loves the picture. Yeah. Number two, maybe you want how to profit during each phase. So understanding when those phases occur is one thing, but how to profit during each phase, that's the rub there. That's the key to what we're doing is how to make money during each phase. You showed up today because you don't have a plan. All right. 37% of you says, no, you don't have a plan. So you really need to start putting these things down on paper, creating rules for yourself that are systematic, they're disciplined, and successful going forward. All right. So I hope you saw that how to identify the market phases, okay, the blast off phase, the uptrending phase, and then the toppy phase, and how to profit from each phase. Again, the S&P 500 stop ascending went up almost 12%. That search went up almost 12%, while the S&P went up 5%. Our top VST stocks, more high momentum type stocks, they outperform the market as well. That's what we're looking to do. We're looking to outperform the market. You don't have to hit home run after home run every time. Singles and doubles are nice, and doing that consistently, you do that consistently, you're very likely to outperform the market more so on a consistent basis. Somebody just typed in about contra ETFs. Yeah, contra ETFs are a great instrument and a great alternative to shorting stocks. A lot of you don't like to short for whatever reason. But you want to learn how to take advantage of down markets. Contra ETFs is the alternative. Okay. So during this phase, this is which phase, folks? This is phase 4. Okay. This is the downtrending phase. So part of your plan could be, I'm going to buy contra ETFs during the downtrending phase. The downtrending phase comes when the confirmed down call comes, when the MTI falls below 1. That's when your plan changes. I wouldn't say changes, but that's when the next phase of your plan comes into play. And again, be sure that you test your plan before putting your hard-earned money into it. So that brings us to the obvious question now. You've learned a lot here, hopefully over the last 45 minutes. The obvious question that you're asking right now is, how do I create this system, this type of system in my portfolio right now? Well, you have a choice. You can choose to continue to try to do things on your own. Maybe put together some of the things you learned today and learn by trial and error. I hate to use that phrase, but mistakes can be very costly. I remember years ago when I first started with VectorVest, I learned the hard way. Mistakes kept piling up, but I learned from those mistakes, but they were very costly. Okay. Or you can choose to do what I did. Okay. I began to follow a plan that got right to the solution. Why do all the work on your own? Again, that's a choice that you have. You can do it on your own. Why do it on your own? There's a system that's already done most of the work for you. A system that is used by thousands of people across the world to help them create consistent returns in the stock market. Okay. What we do is we teach everything here. We teach this system. We teach trading plan development in our Executive Premier Workshop. Okay. The course itself is designed so that you learn the 4 types of market phases, how to profit from each phase, and more importantly, how to develop a winning trading plan. And by learning how to use this step-by-step trading plan, you'll have more money. That's the key. You want to be able to provide for your family. Most likely, we're not going to win Powerball tonight. Okay, so you want to learn how to make money in the stock market, have more money. That leads to more security, and then just more confidence going forward. Okay. Susan says, I might. I might too, Susan. Very, very unlikely though. But again, I hope you saw today that if you do this, you'll achieve the success you're looking for. We put together this 3-day course right here in Cornelius, Charlotte, North Carolina, about 15 minutes north of Charlotte and Cornelius, for you, for the ones out there that are looking to take their investing to the next level. Not just buy stocks because they maybe have a gut feeling or you like the stock. You have to have a systematic plan in place. And 2016, we want to really get this year off to a really nice start. So this is perfect. You can eliminate those common mistakes by following a plan. All right. So what are you going to learn here? What are we going to do at the Executive Premier Workshop? Number 1, you're going to learn when to buy. This is important because you will then learn how to the optimal market entry. Okay. The outcome, after you begin to learn all of the different market timing systems that we have, the outcome you'll have after learning this is you'll know exactly when to get into the market and exactly when to get out of the market. Number 2, when to buy. Okay. Know where to look. You have to create that investment profile for yourself first. Okay. This is very important. Knowing what to buy is very important. You need to know where to look. The outcome you'll get after learning this, you'll be able to identify the right stocks. Okay, you know exactly what to look for during each market phase. Number 3, when to sell. Knowing when to sell. I'll go back to the lovely woman I met in Tampa. Really nice woman. She's had a lot of success in the market, but she was really disappointed in that she gave everything that she made in 2015 right back to the market because she didn't have stops in place. Okay, what you're going to get, the outcome you'll get after learning this, you'll have better risk management rules. Okay, you'll be able to minimize losses and also maximize gains. And then number 4, you'll leave this course, you'll leave this workshop with a written trading plan. Okay, write it down. That way you'll be prepared no matter what the market does, no matter what the market throws at us. Okay. This course now this it's all covered in our state-of-the-art training center right here in Cornelius, North Carolina. Each student gets their own workstation. This is what really separates this course from a lot of the other courses that we give, maybe a lot of other courses that you've attended before. You get your own workstation. This is hands-on. Okay. The facility does have a 20 student max. You can see though that there's not a bad seat in the house. Okay. You can see we have dual screens, so you can follow along very easily. What we like to do, because it's nice, a nice little space there. We put the slides on one screen, we put the program on the other. You will have exercises for each presentation that we'll go through. Okay, so very hands-on. There is no stone left unturned. What I mean by that is every feature in the VectorVest program is fully covered here in this workshop. Okay, and again, you're going to leave with a trading plan that you can implement come Monday. The course itself, I know somebody typed in what's the price of the course. The course itself is normally valued at $2,995. Okay, for you you can attend the special at the special webcast rate of $2,295. Now, if you're elite, a lot of you are elite subscribers, okay? You pay half of the regular $29.95 price, $1497.50. So an elite subscriber, you know who you are. You pay half of the price. But for those of you who are not elite, you get the special webcast rate of $22.95, and the course is in about 5 weeks. So there's some time. It's February 18th and 19th, right here in Cornelius, North Carolina. Any information on accommodations you can be found at our website, VectorVest.com. There are only a handful of seats left, okay? So act fast and reserve yours now. Now, as an added bonus, I love to reward people who act fast. You're going to receive a one-on-one coaching session with me. I'll be one of the instructors at the event. You'll receive a one-on-one coaching session with myself, and I'll cover whatever you feel you'd like to review. You're going to be at this course. You're going to take some notes. You're going to know by the weekend, once the course is over, what you need extra help with, and that's what we'll cover in that hour session. We'll go over tips and different techniques. It's targeted. It's targeted help for you, for those of you who need a little bit extra help after the course is over. Okay, but you have to call and order before the close of business on Monday to get the reduced admission rate and the free one-on-one coaching session. Okay, here's a testimonial. Mary's a lovely woman. She was actually at our 2-day seminar in Tampa as well. User group leader, actually. She said, my purpose for attending the EPW was to get a deeper hands-on experience of using the VectorVest tools and to come away with greater confidence so that I might become a more active manager of my account. What I experienced in the workshop was an amazing wealth of information on each of the various aspects of the program. Each of us received personal guidance at our individual computer workstations. In all, both at the workshop and with the company in general, I am deeply impressed by the quality of teaching, the generosity with which the information is disseminated, and the extraordinary power of the VectorVest program. And here's Tay, great guy, lives in Las Vegas, my favorite city to visit for obvious reasons. He said the workshop was first class and at all times very professional, educational, and insightful, as was the staff. The interaction with the fellow workshop members and the educational staff was invaluable in learning the ins and outs of VectorVest's entire system and processes. I would highly recommend the EPW to all levels of VectorVest knowledge. So here's what to do. Call the number at the top of the screen. Sign up for the Executive Premier Workshop. You will leave there, folks, with a rock-solid plan to take your investing to the next level. Okay, and that's what we're looking to do in 2016. 2015's gone. Let's forget about it. Got to get this year off started on the right track. Okay. All right. Thank you so much for joining me today. I'm going to stick around for a few minutes. I want to answer some of your questions. I know Todd has been. Yes, I'm going to send the slides to us. Absolutely. What they're going to be in the handout section, folks, of your GoToMeeting control panel. All right, so let me do that really quick here. Bear with me. Again, I know Todd has been answering a lot of your questions there. It's going to be a PDF, okay, and let me just make sure that it gets to you. All right, let me just give me 1 second here, folks. All right, I'm going to put it in the handout section. It's downloading. It should be there. So let me know if you see that. If you see the PDF file. Dale says it's there. Yeah, just click on it. Got it. Tim says indeed it's there. Awesome. All right. If for some reason, folks, you're not able to download the PDF file, just give our support department a call. We'll go ahead and send it to you. But everybody should be able to get it. So that's great. All right, folks, I'm going to stick around and answer some of the questions that you have. For those of you that are leaving, have a great rest of your day. And again, let me just put the number here so everybody can see it up at the top. But have a great rest of your day, everybody. But again, I will be here for a few more minutes to answer some questions.